I'm glad.
All right, cool. Got the recording going. Yeah, so last night we went to a daddy daughter Valentine's dance. Yeah, at the high school. It was our second year in a row doing it, and it was pretty fun, pretty
Who
epic.
puts those on?
The high school,
Ah,
yeah, and yeah, I don't know if it's a fundraiser, but we do pay. Yeah, it comes with a dance. You could take a what is it, pictures?
oh, cute.
Yeah, like a couple's picture, and then we took a group picture. They have snacks and treats for you, and crafts and face painting, like you saw.
Neat. Yeah, the crown.
Yeah, it was a crown,
Crown looked
not a
the
foot with
crown looked great.
toenails.
That's awesome. Just organized through the high school, and then you guys just take your daughters and have
Um,
the evening.
yeah,
Oh, that's neat.
yeah, it's good fun. It's well attended. I feel like I fit right in with all the awkward dads, and I can't dance. But,
How does your daughter love it?
oh, she freaking lives for it. Yeah, I so our plan was to have dinner before, and she didn't want to miss the first number.
Oh,
She wants to be the one to open the thing.
that's
we,
awesome.
we were still late, but it was yeah, it was a great time.
That's awesome. Sorry to hear you're sick, but I'm glad you had a yeah, you sound a little congested, but you look great,
Oh,
Drew. Like
thanks.
so
Well, 7 hours of sleep could help.
that's awesome.
Yeah,
Um,
I I might lean on you a little bit more today.
actually, no, my weekend was great with my boys, but um I had a family member of mine, a close family member of mine that I'm really close to. We got married together at around the same time. We had our oldest around the same time.
Nice.
Um, she's been a homemaker for the entirety of their marriage, and so they have five children. Her husband's been primary, provider.
Hmm.
Um, he was diagnosed with a terminal illness in October and
Oh,
has just been like deteriorating rapidly.
oh shoot.
Um,
He's young.
he's young.
Dang it.
I think I'm actually older than him. So like, yeah, I'm actually older than him. 34, 35, I want to say he is.
Oh,
But yeah, so I've just been I've been wanting to just provide her with some support and help her start organizing their
hmm.
financial affairs, because I can't even imagine being in that place.
No.
But but knowing that the inevitable is going to come, trying to do, their best to put their best foot forward and wanting to help support them in that. Um, and so that's kind of been what's been on my mind, and it's been coming up a lot lately this past weekend, just with some of his like with his condition and with things kind of going south rather quickly. But
Shoot.
it crazily actually made me think truthfully about the podcast.
Okay.
Just you look at dentists and we're focusing you're focusing on them as dentists, but and their practice, right? So they're business owners, but they may also be primary providers for their family,
Right.
right? They are may be husband or wife, they may be moms and dads. And if their spouse is a homemaker, I think it's so important to make sure that um, there's a solid foundation set, especially if they're early on in their practice, in building that practice, right?
Right.
That there is some foundational planning in place to allow them to take some risks as they're building their business, especially early on.
Hmm.
And I thought that that might be something good to kind of share some of the insights that we're kind of going over with this family member of mine.
Yeah.
Just made me think about, these dentists as business owners and kind of what their personal circumstances look like, their personal responsibilities, maybe in their families or what have you.
Right.
Um, and so as we're kind of going through this family of member of mine, her finances, the very basics of just having somewhat of a solid foundation, what that looks like. I'm thinking for dentists, they possibly might have school loans, especially as they're coming into their practice and building. So
Right.
having somewhat of, a debt repayment plan
Hmm.
in place, and being mindful of what loans they have out there, interest rates, payments, all of that. If their spouse is a primary home um, homemaker and takes care of the home and family, making sure that they have a solid emergency fund, like we've mentioned before.
Right.
If there are no other sources of income, like a 6 month number would be a good place to start.
Hmm.
That is so coming just proving valuable for this family member of mine, as they're considering what life is going to look like after, um
Wow,
as she transitions, right? Can you imagine like
horrible.
being right, like being home for that long? And I'm positive that there are transferable skill sets for her into the workplace, but having been out of the workplace for 10 plus years, that emergency fund is going to come in solid for them.
Right. Dang it.
Yeah. So we're going through, account titling, beneficiary designations, but even having just like a will, a basic will, advanced medical directive, very basic documents in place,
Mm-hmm.
as dentists are starting to build their practice. Um, and then I do think it's really important, especially as they're early building, to have some type of like disability life insurance in place, right?
Right. Right.
As they are the primary caretaker for their families. That, those policies can help tremendously. Nothing fancy, but just something in
Yeah.
place to secure against that risk.
I was talking with someone. They're with Primerica,
Yeah,
and they're recruiting insurance agents. And this is kind of new to me, but they were just walking through the difference between a term life insurance and a whole life um, policy, insurance policy,
right.
and what that looks like. Um, if you don't have your 3 to 6 month reserves, you know, and a term life insurance, would be a nice coverage as you build up that those savings. Right.
Totally. And it's relatively, for the most part, if you're average health, it's cost effective, right? And it
Mhm.
allows you kind of that buffer, as if I'm a dentist, as I'm building, right, in those early years of my practice.
Mhm.
While my family's still young, while we may have school loans, a mortgage, maybe just different things that you want to think about as you're positioning yourself at the beginning of these early phases. All of these things that I'm like having to rush through with her at this point. And if there are nothing, if there are no things in place, some of these things, take some time to build
Mhm.
and some intention. And so if you're kind of caught off guard and having to reevaluate in worst case scenario, it's a lot of your options are not on the table anymore, especially for example, if you are looking at insurance, that you have like a terminal illness diagnosis, it's you're not insurable basically. And so it's just it's been an emotional weekend, just trying to
Dang it.
figure out how to best support with the time that's left and the resources that are there.
Mhm.
um, but specifically speaking, I think also in this time, specifically geared towards dentists, it's such a great way to allow them more flexibility and more options as they do develop their business, their practices.
Mhm.
Um, if they have a personal, solid foundation, established.
Yeah, as you're talking, I remember this study. If there were two people who graduate from high school at the same time, one was to enter into the workforce, immediately and start working, and then the other one decided to go and pursue, a career in dentistry. as the individual who went immediately into the workforce started earning money and advancing in their career, the individual who went into dental school, they accumulate debt. Um, they are not earning much money if they are, as
Mm.
they're going through their schooling and their training. And then it won't be until about 20 years later that the individual who went to dental school and the individual who went
Oh, wow.
immediately into the workforce, that their earning income intersect.
Ex- Gotcha.
Right.
Okay.
And
That's crazy.
and so if you think about that in terms of a term life insurance, perhaps you can set it up that you're on a 20-year term plan where you can project out and see when your earning potential starts to increase and surpass your colleagues who went directly into the workforce.
That's such great insight, Drew. And there are a lot of great agents, but a lot of great planners out there that can help, run some of those numbers because they're going to look very different for every person. If you're looking at a single dentist that has no family, right, and maybe is renting versus maybe a dentist that owns a home or even has, a wife and children with a mortgage. All of those factors for sure are things that need to be taken into consideration. And
Mm-hmm.
it's definitely not a one size fits all, but you're
No.
absolutely totally spot on with like, you know, looking at info like that.
Mm-hmm.
A 20-year timeline at minimum, really, to try to start to put some pieces together to find solutions that make sense for them. That's really great insight.
Yeah. I I guess I've been recently I've been hearing about more real estate agents who are feeling more confident in the market.
Hmm.
And I was wondering if you have any insight on that. So we saw that the CPI report, the increase in the interest rate, but these real estate agents are boasting that there was a decrease in the interest rates for mortgages from down from 8 to about 5. Like, how does that work?
Sure. So, I know, there are a lot of all the data shows that while consumers are slowing down in spending, that we're still in a housing shortage, meaning that the demand for houses is still up nationally
Mhm.
and that there's not enough supply to meet that demand. And so, as you see kind of this slowdown of rate increases by the Federal Reserve, anything that comes out in terms of interest rates from the Federal Reserve will directly affect all of the interest rates for lending and borrowing in the economy. So, you'll see that transition from Fed hikes to bank rates and saving rates, but also even mortgage interest rates.
Mm.
And so, from what I've seen, I know that a lot of forecasts are actually anticipating somewhat of a decrease in mortgage interest rates this fall, all under the auspice of um, Federal Reserve slowing down the rate at which they're increasing the interest rates.
Mhm.
Hard to say, what exactly will happen and what interest rates will be, but I've seen some mortgage forecasts and some lender forecasts in the high fives, low sixes for this fall, or some of like the forecasts that they're anticipating.
Mhm.
Um, and so, so I guess it's kind of, one of those things where you can't ever for sure be, for sure with the info, but that is kind of falling in line with what we're seeing and what everyone is saying.
Yeah, I guess that's the seasonality of selling homes. Usually it's in the winter time that, it's
Things
low,
slow down. Yeah.
slows down. And so I try to take it all into context. These are real estate agents, right? And they're trying to get more buyers. And
Right.
and so maybe there's a slight manipulation, or I'm just a pessimistic person by nature.
Yeah.
But I,
I
I thought it
think
was
it's
interesting.
important to just especially note that, of all the data, one thing that is for sure is that there is a housing shortage,
Mhm.
that the demand for homes is still up and there is still a low supply. So as long as that is always kind of the case, you'll see, I mean, things might slow down in terms of the rate that things are purchased, but we can be sure that the info shows that, people want houses and there's just not enough of them. Interesting enough, I was talking to, our realtor, last week,
Okay.
and she was talking about rent hikes. She manages her own properties, and during COVID, they didn't hike rents. Obviously things were very uncertain and people's employment were in question. So that year, she tries to follow closely what industry does. That year, they didn't hike any rents for that year. 2021, I can't remember the figure for 2021 and 2022,
Hmm.
but it's almost like they made up that lack of rent hike in 2020 in
Okay.
2021. So, they bumped rates, she bumped rates across all of her properties. And then this year she did a 3% hike, or 2022 did a 3% hike in her rent
Oh wow.
across all of her properties. And so, I think even just seeing it's good to see kind of what is, actually happening for some people.
Right.
There's a lot for her tenants. She has a lot of interested buyers that are wanting to build here in Utah, but it's taking a long time for whatever reason, or they're just not able to find what they want. So they are renting.
Hmm.
Um, and so it's just like a really interesting time to kind of see, all the info kind of play out. But I definitely think that there's still just that interest and need for more homes, which will influence kind of, you know, um, availability of money. And, keep in mind that they're wanting to try to slow things down in the economy, keep everything in check. So
Yeah. Gotcha. I think that's all great advice. I think when you think about the different variables, you should control what you can control. And those are, your behaviors and your own research in determining where you want to be. Right. Because you never know. Things change from,
definitely.
day to day, week to week. But one thing's for sure is where you are personally.
Totally. I definitely think just kind of, having I know we keep talking about it, but just having a solid foundation really allows you to just be more agile, make more strategic moves, as different things come to pass in the market, to allow you to take advantage of different opportunities that present themselves for sure,
Sweet.
and protect yourself, right,
Yes.
against all of the funkiness. So
Well, I'm sorry to hear about your family member, but
yeah.
thanks for your insights and sharing it. We missed this week's jingle, but maybe maybe we can do it on Friday.
That sounds good, Drew.
All right. Well, I appreciate your help. Thanks, Tanya.
Thank you.
All right.
Bye.